the way we say it is the last up candle before a down move, or the last down candle before an up move. All right, so for example, let me pull out my little box here. Right here would be a banker's candle. Why? Because it's the last down candle before an up move. Okay? This one right here is a banker's candle. Why? Because it's the last up candle before a down move. Okay? And these candles are significant because they kind of what's the word I'm looking for here? They just kind of show you that the banks are in control, right? Because they do these little moves where they put in some buy orders or sell orders, and then they drive the market in the opposite direction. So let's continue and just kind of point out some real quick. Right? Here is a banker's candle. Now you can either use this one or, I'm sorry about that, use this one or this little guy right here. Sometimes when we have, I'm sorry about that. All right. Sometimes when we have small candles like that, we just squeeze them all together in one long big one. But bottom line is, whether you pick that one or this one, they are the last candles, the last up candles before a down move. Okay? And then let's just go look at some more. Get rid of this little sucker right here. All right? Again, right here, banker's candle. Why? Because the last up candle before a down move. Let's go back and look. This is a banker's candle. Why? Because it's the last down candle before an up move. This is a banker's candle. Why? Oops. Because it's the last up candle before a down move. Okay? Now, also, these little candles inside are also considered banker candles. Like this one right here would be considered a banker candle. Why? Because it is the last up candle before a down move. Even this little guy right here, let me see if I can get rid of this thing. Even this little guy right here. It's a banker's candle. Why? Because it's the last up move before a down move. Now I'm going to talk about these a lot more as we go, especially in the last video when I pull it all together. All right, but these candles are significant because they are going to identify when we're going to enter the market and where our stop losses are going to be. All right, so let's look at, I don't know, let me pull back here, see if I can find something cool. All right, right here. All right, right here. So, we got a banker's candle here. This is the last up candle for the down move. Now I'm going to go more in detail about this here because this is kind of a cool setup that I'm probably going to talk about a lot throughout here because there's a lot of cool examples in this. And these are things that you'll be able to spot as well once you practice and train your eye. Let me bring this in closer. It's just this candle right here. Okay, so banker candle is significant because they identify when we're going to get in the market and what our stop loss is going to be. Therefore, once we know our stop loss, we're able to calculate our risk. So what I mean by that is on banker's candles, and again, bear with me, on the simplicity of this first video because as I layer in the other concepts, it's going to become more apparent on how powerful this is, and especially when you get into the last video when I pull it all together. But this candle is important to identify our entries and our stop losses, and here's what I mean. Our entries are typically always, now the reason why I say typically, because as you gain more experience, you'll be able to finesse your entry um, a little bit different. But typically, you're going to always use, when it's an up, it doesn't matter if it's an up candle or a down candle, you're going to use the open of the candle as your entry. Okay, we know this is a banker's candle because it's the last up candle before a down move. And we know that price needs to come back to this candle to get out of these orders. We call it mitigation. Okay, and again, you're going to learn more about this as we go further into these videos. So if you don't understand some of the phrases I'm saying right now, they'll be explained in this video series. But this is the typical entry, the open of the candle. It doesn't matter if it's an up candle or a down candle, right? For an open candle, for an up candle, it's at the bottom. That's the open of an up candle. For a down candle, like this one, for example, right here, this is a banker's candle. Why? Because it's the last down candle for an up move. And the open of this candle is right here. So if you were going to take this as a buy, right, this would be where you place your buy limit, at the open of this candle. If you're going to take this as a sell off this candle, you're going to do a sell limit right here at the open of this candle. This is the open of an up candle. This is the open of a down candle. Now your stop loss, when you're brand new, this is what I want you to do. I want you to put your stop loss at the wick. All right. Now, as you become more experienced, you'll be able to learn that you can, in some cases, you'll be able to go to the close of the candle. But being brand new, I want you to go to the wick of the candle for your stop loss. So your entry will be the open, and your stop loss will be the wick. So down this example, this is going to be, let me color this red for a stop loss. So identify that. Okay. And for the buys off of a last down candle for an up move, your stop loss would be right here. All right, so your entry is going to be here. All right, you can see price came down to this entry, took off. Say price came up to this entry and dropped. Right, these are both would have been excellent trades. So those are banker candles. That's where you enter, and that's where you put your stop loss on both these type of entries. So now, how do you practice identifying these? Right. Well, it's gonna take work, guys. Right. Ladies and gents. This is not get rich quick. Right. This is not some kind of a lottery thing. This is a skill that you need to learn. And once you learn this skill and master it, the sky's the limit. You can make as much money as you ever want to make. The only limitations to how much money you can make is how much money you have in your trading account and what percent of that account you want to risk per trade. Those are the only limits. So bottom line, you want to make more money, you get more money in your account. Okay? So how do you practice this? Well, there's a couple ways you can do this. If you use TradingView, this is a platform that we use to mark up the charts. Okay? Now, they have a free version of this, which is very limited. You can't set any alarms. You can't. I don't believe you can do the bar replay feature, which is very important. You'll see how I use this in future videos. But you can also do this on MT4 if you've got MT4. But the way you want to do is practice this and set whatever, 10 minutes, 15 minutes, 30 minutes a day. Pick any pair, any chart, any time frame, right? And just scroll back however far you want to go, right? There's all kinds of data. There's months, there's days, months, years of data that you can scroll back on, right? Just scroll back, forever, and just randomly stop, all right? Let's say I'm going to stop here. And just start identifying the banker's candles, right? Just go, okay. This is the last up candle before a down move. So let's just highlight that candle right there. All right. And then you just keep going on. You say, okay, well, here we go. It's the last down candle before an up move. This is the last up candle before a down move. another last up candle before a down move. There's another up candle before a down move. There's another up candle before a down move. There's another down candle before an up move. All right, here's an up candle before a down move. All right, here's an up candle before a down move. Another little mini up candle for a down move. Right? So just practice this. Do it, whatever, 10 minutes a day, 15 minutes a day, an hour a day, whatever time you have. Consistency is the most important thing.